Hello, welcome everyone out there online. Welcome to our discussion on Truth in Accounting's 2023 Financial State of the State reports. We're excited to share our findings with you. First, I'd like to thank the Independence Institute for hosting this event. We are in their war room, and it's a wonderful facility, and we're grateful for them allowing us to use this today. My name is Christine Kuglin. I am the director of the Truth in Accounting Project at the University of Denver. The release of our reports takes a team of talented people, and I do want to thank our interns, Angela Langowski, Bright Ikweti, Eric Pitek, Amber Saxon, Courtney Howitz, and Jackson Brattain for their hard work in extracting this data from PDFs to create these reports. I also want to thank a team members that you do not see here today, Grace Sang, Sean Cruz, and Karen Danford. It truly takes a village to put these reports together. Thank you also to our donors. Without you, we could not keep this information flowing to the American citizens. I want to quickly share some of the important projects coming out of this partnership between Truth in Accounting and the University of Denver. I want to thank the University of Denver and Dr. Sharon Lassar for their support in forming this partnership. I want to thank the professors, including Professor Tom Hall, who has supported us in every single event. Beyond the reports you see us issue, we are working on promoting transparency in governmental accounting through active participation in the Financial Data Transparency Act. I am the chair of an important conference to be held in Washington, D.C. in November concerning this new legislation, which proposes that government modernize their data in a manner similar to how publicly traded companies submit to the SEC. I spent the summer speaking at various national conferences on the importance of this act. Additionally, we're hoping to host a symposium next summer on the DU campus, which will focus on the importance of machine-readable data in government reporting. The University of Denver supports me in teaching classes to engage with students, assists in research and professional articles, and supports the administration of grants, such as the one I'm completing with the Mercatus Center and XBRL US to further develop a machine-readable financial taxonomy for government reporting. These are only a few of the ways the University of Denver is working with Truth in Accounting to improve transparency in governmental financial reporting. And so without further hesitation, I am happy and excited to introduce our esteemed panelists, founder and CEO of Truth in Accounting, Sheila Weinberg, president of the Independence Institute, John Caldara, and Utah State Auditor John Dougall. And now I will turn this program over to our moderator, Judy Willard, our Communications and Development Manager, to lead you through this exciting discussion.
Thank you, Chris. Before we start, allow me to remind everyone that Truth in Accounting is nonpartisan. We bring everyone to the table for an honest discussion on numbers. Accounting does not care about your political party. It is a methodology for understanding and measuring value. You will hear many ideas and opinions here, and that's okay. In fact, it's encouraged. Truth in Accounting's role is to say, here are the real numbers. Can you afford it? Is it time to prioritize? Lastly, we are the only organization in the country doing a complete analysis of the fiscal health of government by including their retirement, liabilities, and obligations. Now, let's get the fun started. Panelists, I will give you each 5 to 7 minutes for opening remarks on the findings from the report and your feelings about your state, good or bad. Feel free to brag, feel free to complain. This is real talk here. And in between each of your presentations, I will give the other panelists an opportunity for comments, questions, or God forbid, criticisms. So ladies first, Sheila, in this year's Financial State of the State report, you found that in 2022, 28 states did not have enough money to pay their bills, which is actually an improvement over last year because the number was 31 states. And you also found this year that the combined debt between the states was over $938 billion. Again, an improvement because last year it was $1.2 trillion. Only 71% of pensions are funded and only 11% of healthcare benefits are funded. Sheila, why do you produce these reports and what else did your report this year uncover?
Thank you, Judy and Chris, and thanks for everybody for coming. This is the 19th year that we've produced this report. We started producing this report when we found that state and local governments were not required. In fact, they were required not to put their pension liability on the face of their balance sheets. So we realized that citizens and elected officials did not have the financial information they needed to be knowledgeable participants in their government. And that is the key here. I know there's a lot of numbers involved, but we really we try to provide to citizens and their elected officials true numbers so they can make knowledgeable decisions, tax and spending decisions. Again, as Judy mentioned, we don't advocate for certain tax and spending decisions, but we really believe that citizens can't be active, knowledgeable participants if they don't have the true numbers. So once we realized that the states were not putting their pension liability on the face of their balance sheets, we took it upon ourselves. We thought it would be a difficult task to do. To recast each state's financial condition as if those liabilities were reported. Unfortunately, a difficult task became almost an impossible task. And there were actually 3 or 4 times in the middle of the first process when we did this the first time, where I actually put my head on the desk and said, maybe we could return the grant money. This is just too hard. But we prevailed. Since that time, we've done 19 of these, and we've also done the financial state of the cities, which will be out in January, which does the 75 most populated cities. We have encouraged the Governmental Accounting Standards Board to require state and local governments to put their pension liabilities on their books. Fortunately, we did win that argument, and state and local governments are required now to put the liability on their books, but there's still some issues with the numbers. So we still find it important to recast the numbers to provide a more truer position. One thing that we find is currently, we were surprised by the improvement. The pension liabilities overall got worse because the pension liability is based upon the net assets minus the accrued liabilities, and the assets in 2021 were very high, but then the market took a dive in 2022. So the pension liabilities were higher, but that was offset in a lot of states by additional tax revenue. People had been pinned up with COVID, had saved money, and we're doing more spending, and the states experienced a lot more additional tax revenue than they expected. And also the federal COVID aid also improved a lot of states. We did find again that 28 states didn't have enough money to pay their bills, which we find unusual because state and local governments are required to balance their budgets. So therefore, all the states shouldn't have any money that they should owe to pay their bills. But what the states have done is that, unfortunately, they calculate their budgets pretty much on the cash basis. Now, keep in mind that the cash basis is it only has your inflows and outflows. And it is such a flawed accounting system that the IRS doesn't allow a corporation that makes more than $28 million to do their books that way. Yet state and local governments do their budgets that way. And why do they do that budgets that way? Because they don't have to report all their expenses. So the biggest place they hide their expenses is their pension liabilities and their retiree healthcare liabilities. The employees have a compensation package. It includes salaries, healthcare, pension, and retiree healthcare. And the employees earn those benefits every pay period, and the governments report a liability every pay period. And for the budgets to be truly balanced, they should go ahead and pre-fund those benefits that have been earned and promised. Otherwise, you're really not balancing the budget. There is, keep in mind, a lot of discussion about pensions. And as Judy mentioned, pensions are 71% funded, which according to the federal government is not well funded. But They are doing some, 71% is funded. The retiree healthcare benefits, which like in my home state of Illinois, are just as constitutionally guaranteed as the pensions. Most states do a pay as you go, so they don't put any money aside to fund these benefits. So people, again, focus a lot on these pensions, but people do also need to focus on the retiree healthcare. We find some states, I think I was speaking to Alabama, for example, yesterday, and I know New York State has this also, where their retiree healthcare liabilities are actually less than their pension, are actually more than their pension liabilities. And John, does Utah have retiree health care liabilities, the OPEB liabilities?
Yeah, we have OPEB liabilities, but I think we were the first state to jump on setting money aside to cover those.
And I know that South Dakota and I think it's Nebraska do not have any retiree healthcare liabilities. So, but again, we do have if you want to look at your individual state, go to our sister website, data-z.org, click on your state, and you can pull up your individual state, and also go to our charting feature where you can compare your state to other states.
Thank you, Sheila. Gentlemen, did that trigger any questions or comments from either one of you for Sheila?
It triggers a whole bunch of things for me. For those who don't know, I'm John Caldara. I'm the president of the Independence Institute, and thank you for being here. I'm just thrilled to have you here. Before Truth in Accounting came, we at Independence knew there's a liability. We didn't know how to describe it. And so when you guys came and said, well, let's describe it in the way that regular people can describe it. You owe money on your house, and so the state owes money on these pensions. What is it? And what is it as a percentage of their budget? It really helped. So how much of this could honestly be described as a Ponzi scheme? That how much of this is dependent upon future taxpayers paying in to pay for people who are already retired? Because I see, I wonder if the upcoming Civil War isn't red states versus blue states, or urbanites versus people in the rural areas. I wonder if it's people who are still going to be working well into their 70s to pay for government retirees who retired at 58, who are still living the life, and I got to still be
or younger.
And I still have to be working to pay their benefits. And I wonder if that's going to be the Civil War.
Yeah, and that's why we call it a taxpayer burden. We take the money that is needed to pay the state's bills and we divide it by the taxpayers. We're noting that Colorado did do better this year. Keep in mind that their liability was recorded, their pension liability was calculated as of December 31st, 2021. They don't correspond their fiscal year and for the state government to their pension liability, which doesn't make sense. That would be kind of like, you're looking at your debt, your credit card debt 6 months old when you're looking at your other debt. And so we found that, but we also found that the school districts in Colorado, their share of the para liability is just astronomical. And each school district, if you look at their balance sheets, their liability is just overwhelming, which again, future taxpayers are going to have to pay for unless they reduce the benefits.
So can you call it a Ponzi scheme?
It's some type of scheme. I always find it, I didn't quite understand this when the former comptroller David Walker used to talk about how the Defense Department is a huge retiree pension and healthcare plan for former military people that periodically fights wars. And the question is, are state governments huge retiree pension and healthcare programs that do provide some state and local state services?
Well, I'm John Dougall, Utah State Auditor. It's great to be with you. Talking about pensions, it reminds me back in, I served 10 years in the House of Representatives. And in 2007, I started championing pension reform because clearly at the time we're in the a bubble and we had an underfunded pension. And one of the dirty little secrets that most people don't understand is politicians get wins with the promises they make that they don't fund. Somebody else, long after they've left office, gets stuck with funding it. And so started pushing pension reform. Clearly, we had a market downturn, which made that politically more viable. One of the concerns I had when I became state auditor is the lack of transparency when it came to many of those obligations and their assumptions when it came to their investment rate of return. And so we did an audit there. And even though in Utah, they were assuming an 8% investment rate of return, they were always funding their annual retired contributions. And yet when we looked at some confidential reports, they only had a 39% chance of meeting their investment rate of return, which meant the employers / backstopped by the taxpayers, we're going to have to be footing the bill on more and more of that and stuff. And so we brought some transparency to that. Ultimately, they dropped the investment rate. It went from 8 to 7.5, then it dropped down to 7.25. Now they're at 6.95. So they were getting much more in the range that we expect. But what ends up happening as a result of that is the employers pay more, meaning the taxpayers shoulder the burden of paying those bills. And so.
Yeah, and on our website, data-c, there is a pension tab, and you can get each state's pension plan, their unfunded liability, plus their rate of return that they're using to calculate that liability. And I kind of funny when I hear people and they talk about when the stock market takes a hit, they're like, well, thank God I'm not invested in the stock market. Well, you are, because all these state and local government pension plans are invested in the stock market. And during the last couple of years, we have found where the market, was very high. We looked at Colorado Para specifically, and they had, in 2000, I think it was 19, they have more than 20% return, then 18% return, 17% return. So for 3 years, they had these huge returns. And then in 2022, those were reversed and they reported a negative 13.4% loss. But that ate up all of the gains that they had in all 3 years. And the liability in 2022, the net liability was higher than it was in 2019, even though they had 3 years of great returns.
Now, let me share two other little dirty little secrets. So in Utah, I set aside as an employer 24% of salary to service the pension bill. 24%. There, in the private sector, there's nothing like that. Maybe you're getting a 3%, 50-50 match type of thing. 24% of salary just going to fund pension for what we call tier 1 employees, the ones that were grandfathered under the old plan. The other thing that I've fought, I've brought some transparency to this, but haven't won this battle. But in Utah, we have a constitutional debt limit. There's a certain amount of debt that you can take on relative to the property value in the state. I've tried to push that pension liabilities should also be counted against that constitutional debt limit. But our attorneys have said, because it's not this clear, firm debt, it's kind of fuzzy, therefore it doesn't count against it. And so we started producing a report where we would talk about debt and other obligations to try and bring transparency to what that looks like relative to our constitutional debt limit.
You made mention about prepaying for this. We did a study here at Independence Institute. Oh my God, it might be 15 years ago. And we went to the marketplace for University of Colorado in Denver professors and said, if we were to buy a market-based product that guaranteed the same rate of return as your public pension, how much would it cost? If we went into the marketplace and said, we want a retirement plan that guaranteed the same rate of return that you're going to get when you retire, how much more would your salary have to be? And it turned out that your salary would have to be about 29% more in order to purchase that, which it sounds exactly like
close to the 24
and
change
so
we're paying.
And getting back to the truth in accounting, truth part, what's very difficult is that when we hear about the public employees' salary, we don't hear about that part.
Right.
That really, whatever that educator's salary is, you need to add close to 30% more on top of that salary to get the true compensation number. And so the public,
sometimes upwards of 50%.
yeah, pardon me?
Was that just their pensions?
That
or
was just their pension,
not their retiree healthcare?
not their healthcare, not their healthcare at all. It was just
And most state healthcare plans or Cadillac healthcare plans, they get good deals.
But this-
Again,
but this
again,
feeds the narrative, which
Sheila,
is underpaid
we
employees.
chose the wrong jobs.
Well, that begs actually a very good question. How can this be stated and not look like you are kind of bashing the employees when it's not really their fault? So how can Truth in Accounting kind of lay this out? Like, I like to think of it as, I think if they knew that their pensions weren't being funded, they might be a little bit upset because they might be worrying, are they going to be there? Or is it going to be like Detroit later and pensions are going to?
This is not, I mean, part of it is, yeah, I've got a certain amount of jealousy because I can never retire. And part of my working will be to pay for government retirees who get this lush benefit. But the reality is this bubble bursts, and those people who are working in government now should be fully aware that this is unsustainable. And at some point you want these numbers to be known, because when this merry-go-round stops, somebody's going to be left not getting paid. For those who live in Colorado, we remember when United Airlines had lush pensions, very lush pensions. I have friends who are pilots and they got terrific pensions. And then their pensions got cut in half during the bankruptcy. And then those pensions got cut in half again. So retired individuals who thought they had nice retirements ended up having to get jobs again in their 70s and 80s because there was no money left. And people who work for government think that's an impossibility. No, that's not an impossibility. And so this is about protecting government workers just as much as it is protecting taxpayers.
Yeah, and the corporate workers are, they did find in the 70s, there was a law called ERISA passed to protect public corporate workers, because these pension plans, the corporations had promised the benefits, had not set aside enough money to fund them, and that some of these plans went bankrupt. So they put in place that the government, the corporations had to report these liabilities, report them at valid numbers, truthful numbers. They had to start funding the liabilities properly. They couldn't push it off into the future. And what happened in the corporate world is, once the corporations understood the amount of the liabilities and that they really couldn't afford them every single year, they got rid of their defined benefit plans, the plans where the employee is guaranteed a certain benefit. And it doesn't matter if we put money aside to fund it, it doesn't matter. They're still going to get that benefit. And it doesn't matter if the stock market takes a hit, they're guaranteed to get that benefit. And so these corporations got rid of those programs and switched over to defined contribution plans once unfortunately, that law had one line that exempted state and local governments. And so most corporations don't offer these plans anymore. And in fact, I'm surprised that the UAW workers right now are kind of pushing for a defined plan. I'm like, well, that didn't turn out well for you before. I really question whether you should be pushing that now. But it's still working out for the governments, because, they just don't have to report them and don't have to in their budgets, and they don't have to fund them properly.
I'm glad you mentioned that, because we are actually doing a lot of work on ERISA. So if you want to know more information about that law that was passed in the early 1970s, we want everybody to know that the government was left out of that law. And we find that odd. Mr. Dougall, State Auditor of Utah, as the person responsible for giving Utah taxpayers and government officials an independent assessment of financial operations, can you tell us why Utah is consistently ranked in the top 5 year over year? And for the 14 years that we've been analyzing the states, your state has had a surplus. So give us the rundown on Utah and why you're so awesome.
Well, thank you. I wish I could say we're number 1, but I guess number 4 in this report's pretty good. I think there's a couple of things. First of all, we have a long culture of trying to be fiscally responsible. Sometimes we don't quite live up to it like I wish we would, but we have a long tradition. And so it's not just whoever's in office today. There's the practice of what we've done in the past. And I'll bring up some things that we do that as I talk with colleagues around the nation, they find odd. First of all, we try and match one-time revenue with one-time expenses. Okay. Because what happens is if you tie one-time revenue with ongoing expenses, now you're guaranteeing you're going to see tax increases and other things like that going into the future. So you think when I distill this down for folks, I describe if you get a bonus, you don't, fund your mortgage off of a bonus. You fund your mortgage off of your salary. It's an ongoing revenue stream that you anticipate year after year, if you will, every 2 week kind of thing. That's what you fund your ongoing activities with. So that's one thing that we do that's kind of unique. The other thing we do, we have rainy day funds, and we try and adjust our rainy day funds based on our anticipated volatility. So we'll do an analysis to say, here's how much should be set aside in the rainy day fund. And we automatically sweep any surplus at the end of the year. Half of that goes automatically into the rainy day fund. And we're very judicious with how we use it. So when I was in the legislature in 2008, we saw the housing downturn, and there was clamoring that immediately we should drain the rainy day fund. And we didn't do that. We came in, we cut budgets, other things like that. Over that entire period of time, by the time we started coming out of it, somewhere 2012 period, we had not fully depleted the rainy day fund. I think we got down to, we had $100 million still left in it, but we were very judicious over multiple years in how we use the rainy day fund to dampen any effect and any clamoring to go raise taxes. So that was something that I think is beneficial. One of the other things we do, I talked about tying one-time revenues with one-time expenses. Sometimes we tie ongoing revenue with one-time expenses. So we'll take ongoing taxes to fund a road or to fund a building, because what happens is when the market turns down, then that ongoing revenue can be used for other activities to prop things up. So it's kind of a pseudo backdoor rainy day fund. When it comes to our base budget, now I'm one of those, base budgets have some benefits and some drawbacks. The history in Utah behind a base budget is my second legislative session. We had a new governor, and she wanted a certain reading program, her reading program. And if we didn't fund it, she threatened to veto the entire budget, not just some line items, the entire budget. And this is 2 days before the end of the session. We have a fixed date that we end. And we've never been faced with a situation of what happens if we end the session with no budget. What happens? And so, balance of power thing, we decided to start doing a base budget at the start of the legislative session that the governor had to adopt within a set period. So we didn't run into that dynamic. But one of the things that we started doing in the base budget is we would do cuts, sometimes 1%, sometimes 2%, sometimes 3% cuts built into the base budget to force agencies to reprioritize their spending, to get the scenario of you can't always just assume there's going to be an increase, and building that into the base budget. So it's not kind of what they do in DC, which is lock in more spending year after year. Sometimes we're trying to tighten our belt. We jumped on it early when it came to pension reforms. We jumped on it early when it came to other post-employment benefits and stuff like that, setting aside money to pay for that. Those are some of the things I think Utah does well, and I think that's what helps us. But as I said, many of these are various practices that we just pass from generation to generation to generation in elected office, whether it's the auditor's office, whether it's our legislature, whether it's our governor, whether it's our treasurer. These are just things that are expected. This is just how we do it.
Yeah, I was able to, years ago, we presented the Truth in Accounting Award to Utah. Not that they were they were great financially, but not the best, but their budgeting practices were very well. And I was able to present it to the budget director. And I asked her, I said, people ask me this all the time, what is Illinois doing wrong, but Utah is doing right? And she said, well, here we do something very weird. We only promise the services and benefits that we can afford.
What a concept.
What a concept. Mr. Caldara, what about Colorado? Your boots on the ground down here. And I think we had a conversation earlier. As an outsider, when I fly in, I see cranes everywhere. It looks like it's growing like crazy. What's really happening in Colorado, in your opinion?
Colorado is in a mess. You might see cranes, but we've seen a rush of progressive laws and regulations. So Denver, for instance, has the highest vacancy rate of commercial buildings. We've seen we're number one in car thefts. So at least we're number one in some things. We're really proud about that. It is definitely a state on.
I'm glad I didn't get a rental car today.
Oh no, it's good to get a rental car. Definitely, just don't bring your own car. And it's dealing with exploding governmental expenditures and regulations. And I think a lot about the word truth. Let me talk about why I think this is important on a not just an ethical level, but on a absolutely moral level. I'm not an accountant, so what you guys do is incredible, and I couldn't do it, and most people couldn't do it. But there's a difference. Wall Street Journal did a story about how to discern truth in China, and because we cannot trust the official records, we don't know what's going on. When people are trying to figure out what's going on with their oil supplies, we can't trust the numbers that they put out from the government, so they don't know. People have companies that spy on the oil wells and try to judge by the shadows. There's a floating top on oil wells, and by looking at the shadows, how much oil is actually in the wells, and they add up all the shadows to take an estimate to try to get what they think might be the truth, because there's no faith in the government. There was a story that came out of the transportation department in Colorado, the most tiny little story, but it tweaked something in the back of my head. It was in the wintertime, and there was a couple passes. You can go through a tunnel, you can go over a pass, and it was a snowy day, and the transportation department, for the good of the people, didn't really want people driving on the pass. They wanted people to take this safer road, for their own good. That's wonderful. So they put out a report that the road was closed due to construction. Fact of the matter was, the road wasn't closed due to construction. It was perfectly open. It was just that somebody at the transportation department thought it would be better if people didn't ride it. And so they put out a false report. They put out a completely fake report. And this is a tiny little thing, all right? This is tiny, and maybe it was for the best, and it worked out beautifully, but it was a wholesale lie. And that what I love about those tiny little stories is that you can pick them up and they're small enough to look at. And what happens is that government says something and you lose trust in government. Government is no longer an arbiter of truth. And that becomes an issue that corrodes the job of government, which is to say, no, your property line is here when you go down to the clerk and recorder's office or the assessor's office. When you go down to the public records and go, no, this is it. When you go to the judge, and you rely on those records. When you rely on it, the legislature passes tax increases. We have something here called the Taxpayer Bill of Rights. You're supposed to vote on taxes, but they decided that if you raise fees, then you don't have to ask permission. And so we were just exploding with fees, and they passed something called the hospital provider fee. This is a bed tax when you're in the hospital. And interestingly, they put in the law that when you have this tax, when you're at your worst and you're in the hospital, the fee cannot show up on your hospital bill. So they're taxing us. And when you get your bill is outrageously high, in great part to this new tax that doesn't even show up on your receipt. So who are you angry at? Not the guys who are charging it, but to the hospital. And again, they're hiding the costs to you. And when you think about this, what it does is it corrodes faith in government. Now, in China, when they do this, the people don't understand it because there's no way for them to understand this. Fortunately, we have a fourth estate, and we have organizations like Truth in Accounting that can try to bury underneath this and get to it. But when you have things like pensions that are liabilities, but the state doesn't put it out there the right way, and small groups like Truth in Accounting have to crawl through the numbers and crawl around and bring them forward and try to put them into the light, what does that do for democracy? What does that do if you are successful? And there are forces that never want you to be successful because they find that a danger. In a way, what Truth in Accounting is doing is subversive. It is dangerous. And here you are, you're just freaking accountants. But it is the most dangerous work that goes on because you're just trying to get to the truth and bring it forward. And we're seeing that around the world, that simple truth, which we all take for granted, is the dangerous work. It's the kind of stuff that gets you sent to gulags in the Soviet Union. It's the kind of stuff that gets you sent to re-education camps in China, or you just disappear. And so the kind of work you do is dangerous. And to think that it doesn't happen here because, well, it doesn't happen here. No, it happens here all the time. And sometimes it happens right there in plain sight when the legislature says, it's in the law, we're keeping it opaque. Or the Department of Transportation says, we're just not putting that out. If it happens on those levels, where does it happen on other levels? And that's why this is more than just finding out the truth about liabilities. This is more than just the truth of how much do we really owe. That this is really a fight for democracy, that for us to understand what's going on in our government, we need to know the financial truth.
Yeah. So John, I'm gonna interrupt you because you're touching on such great points. And I just want to reiterate what you're saying, that this is the paper copy of our report that you can get at our website, truthandaccounting.org. But it takes a team of about 14 or 15 of us. Many of them are interns, university interns that we hire with the generous donations of some of the people out there to dig that information out, because the information is all presented in PDF form. It is all still in 1492, when Columbus sailed the ocean blue. There was a gentleman named Luca Pacioli who recorded the process of accounting in a book called the Summa. And that book doesn't look any different than government reports look today, 500 years later. So for us to produce that report and to dig in, as you have stated, it takes a team of 14, 15 people just to put together a report this big. Now, I do have a question, but to follow up, I agree with you. Now with the Financial Data Transparency Act that was passed and signed into law a little over a year ago, it's going to mandate that governments produce financial data in machine readable format, much like if anybody out there is familiar with the SEC and the reporting requirements. And if you look at research, there is not a lot of government research. And I contend one of that reasons is because it's so hard to get the information. Now, Mr. Dougall in the state of Utah is very transparent. They're happy because they're proud of what they do. Some places aren't so proud of what they do. In fact, in working with the grant, I've had entities say to me, I don't want to do this because I'm afraid of the government. And I say, but you are the government. So sometimes even the governments themselves don't want to be transparent. So my question to each of you is, what do you think we can do to make this information more transparent and more readily? One of the things universities do, and Professor Hall is there, we do research. We bring these things to attention. Do you have any kind of comments as to transparency and what more can be done to facilitate transparency so average citizens can have an idea about what is true and what isn't true? Do you want to start, Sheila, with that?
I'll turn it over to John. John,
Yeah, so transparency is something that we spend a lot of time on in Utah. We've got a financial transparency website, and it's not just transaction level detail of the state, but it's pretty much every governmental entity in Utah: cities, counties, school districts, special local districts, transit districts, cemetery districts, charter schools. We've got over 1,000 entities there. You can go to transparent.utah.gov and you can dive into the details there. And so that's one of the things. And I talk about, first of all, when transparency 1.0 was just kind of mother, may I, may I get this record? Transparency 2.0 was mass data dumps. Okay. Transparency 3.0 to me is where you start curating the data. So we have something when it comes to public education, we call it Project Kids, Key Integrated Data Systems. But historically, we didn't even know what it cost to run a school, let alone what it cost to operate a single class or what we spent on, math instruction. And as I go around and ask superintendents, they couldn't answer these questions. But at the end of the day, we know which students are in which classes with which teachers and how much they get paid and how students did on the tests and what grades they got in the classes, on and on and on. And so through there, what we started to do is curate the data so we can show on a student by student basis. Now we show that to administrators because that's FERPA sensitive, but we can show them on a student by student basis, the first order approximation of how much was spent on that student and how it was spent. You can go off to our website, auditor.utah.gov/kids, and you can look at dashboards where you can see what kind of results we're getting for student performance relative to the spending and other things like that. And so part of the dynamic is creating a culture where folks want to share the data. They're proud of it, other things like that. Sometimes it's begrudgingly sharing it. Some governmental entities in Utah maybe aren't as thrilled to do it. But where I would like us to get to is where we just build Transparency 4.0, where we build transparency into our processes, our systems, where taxpayers along the way can see in advance kind of what's taking place and what's going on rather than after the fact, here's what took place, so they can better understand why government makes certain decisions and why it engages. But you got to make that simple and integrated in what they're doing. When you talk about XBRL and other things like that, the biggest drawback is how do you take those PDF documents that Columbus discovered, but how do you take those documents and get it into a format that's easy and simple to produce rather than it's really complex? When you talk with chief financial officers for various governmental entities, they feel overworked. And so, okay, so some of them, at least in Utah, the concern is not transparency. It's the concern of what does it take for me to produce it? And so if we can help them with the tools, then I think that will further us down that path. Now, when I talk about our transparency efforts, we typically have databases where we have the user interface on the website that the citizens can access, but we have what we call power users. They come in the back door and can do direct queries of our databases to do their own analysis. So for Project Kids, we don't have to be the only ones to curate that. We want different advocacy groups, newspapers, whatever it might be, research at universities to curate the data for their audience, for their constituency, and to further the effort of transparency and government oversight.
I'm just going to say really quickly, thank you, because I think you've just given some very, very good ideas and some forward thinking processes. So thank you for that answer.
Yeah, and going back to John's comment about, that our representative forms of government are being harmed because people do not know the true financial condition of their government. What we're finding now is, because the state and local governments have additional tax revenues, they got COVID money that was only supposed to be for COVID, but for some reason they seem to have extra COVID money. I don't know how that happened. I don't know why they didn't have to send that back to Washington if they didn't need the COVID relief.
Oh, I can tell you about that later.
That's another issue. So for example, my state of Illinois, they say that they have a surplus. California has a surplus. I spoke to a reporter yesterday in his state, Alabama. They have a surplus, is what the government's reporting. The reporter in Alabama said, well, we have a surplus. So if you have extra money, what does governments do? They have to spend it, of course, unlike Utah, who might save it. Crazy.
Or cut taxes and send it back to the people that actually paid the bills.
That's crazy ideas. So in Alabama, because they had this extra money, they did spent extra on prisons. Illinois, I know the governor did a pet project for additional money for education because they had this quote surplus. But Illinois is $175 billion in debt, including their pension debt. Alabama is $9.8 billion in debt. California is $240 billion in debt. But they're going out telling the taxpayer, telling the elected officials, we have surpluses. So these tax and spending policies are being made based upon these fictitious surpluses. And then the states have and local governments have balanced budget requirements. So the people, when they hear that, it's like, oh, well, we must be doing good. We're balancing the budget. We're actually running surpluses. When they go to the voting booth, it's like, well, we should probably keep these guys in office. They're being fiscally responsible. But if to truly balance their budget, they had to raise taxes or cut spending, those elected officials might not get reelected. So this is why we think that our representative forms of government are being harmed, because citizens don't have enough information to decide they might be somebody who's for a tax cut, or they might want additional programs, or who should I vote for? They don't have enough information to make those decisions knowledgeably.
Let me say a few things. First, you asked the question, how do we get this out? Fortunately, there's always a push for transparency and open records. Every time we bring this forward, Colorado has the initiative process. Politicians don't like open records. You have to bring it forward through an initiative process if your state has that. And when you do, it never fails on the ballot. People like open records. And if there is a bill for open records and there's enough media attention to it, it is very difficult for the elected official to vote against opening records, but there has to be a lot of media attention given to that. But then after that, it takes activists. And this is where shining light is the best disinfectant. How many governments are there in Colorado? You people probably know, so don't answer. I'll ask you, how many governments?
75.
Very good. There are over 5,000.
Oh, I talked about over 1,000 in Utah, so Colorado's got to be bigger.
5,000 governments and special districts in Colorado alone. Each one has the authority to raise money, distribute money. These are special districts. Every time you build a new subdivision, you create a new government, library districts, cemetery districts, fire districts. And so the creep is everywhere. Each one of them have to have some sort of level of disclosure, but they also have to have oversight, open meetings, and the rest. The way we fight this is through addition. We need to get activists on the right level to look at these. We were able to pass a law requiring all 178 school districts, another level of government, to keep their audited statements and books online on the front page of their websites. Now what we need are auditors. So our local government project is to get people in the lowest level of government to look at these things, to get involved on the boards and commissions of local government. Too often we look at the highest level of government. We're all excited. We see that the media growth in DC keeps growing. It's the only area of government where there are more and more reporters every year. But on a local level, there are less and less and less. So those people who want to keep government opaque infiltrate lower government. We have to get activists in. This is why our local government project is so dear to us. There's another level of falsification in government. You keep talking about the money that's been there. The other lie is that it's money. It isn't money. It is made up dollars. And as somebody who follows monetary theory, I'll get on my high horse and to say that since we have slowly removed ourselves from the gold standard and finally did it in 1972, when we have fiat currency, while we have the best fiat currency on the world, it's still just paper. And so we inflate our currency since 1972 on an average of like 23% a year. That dollar bill is not worth what it is worth before. So we're papering over a problem with dollar bills that are worthless in the long run. So it's very easy for the Fed to keep making more and more dollar bills. That is an illusion, and we're getting less and less. So this Keynesian model also is a lie. And at some point, maybe it's in a year, maybe it's in 20 years, maybe it's in 50 years, it pops. And when it pops, it's going to be devastating. And so you want to talk about the final bit of transparency is that we have a dollar bill that is becoming worthless over time. And so the stimulus dollars were dollars made up out of thin air. And then we have the fiscal policy on the other side of Congress spending money it doesn't have. So we're making money out of nothing and they're spending money they don't have. It's a beautiful combination to go over what you've got. It doesn't paint a beautiful picture.
I was going to bring up one other thing. You were talking about, well, two things. You're talking about debt. One of the things that I would say that Utah does well at state government is we're very judicious with our debt and we keep it short term. We talk to some governments, they got 30 and 40-year bonds. We don't do more than 7 years when it comes to buildings, and no more than 15 years when it comes to roads. So we try.
That is remarkably impressive.
Yeah, well, and so that's where it's not just debt, but it's how you manage that debt. And so I just want to flag that because it's really easy to layer on this debt that is out there for generations.
One county in Colorado, Weld County, does no debt. They build their roads with cash. They built their jail with cash. This is crazy.
And I wish we could
save up their money and they spend it.
They
I'm-
save up their money?
I have a brand new
Save up-
councilman for the city I live in. He's been in office 1 week now. And I was talking with him. Well, if we need to build something like this, what's your recommendation? Save the money and then pay for it. Don't borrow. And I gave him some history of, unfortunately, where our city kind of went off the rails
A few
in
years
2000,
back,
2008.
we brought a whole bunch of children up there to give the county thank you cards from the kids saying, thank you for not putting us into debt.
Yeah.
It was
Let me throw in one other thing. And this is one of those cautions. And I talk about critical infrastructure, and critical sometimes is different things in people's mind, but it's the stuff that it's going to be there year after year. It can look really good in the short term if people don't properly maintain and pay for it. And it can be really costly in the long run. And so some politicians will see a short-term run by not appropriately maintaining that critical infrastructure that future generations are then paying.
Yeah, the deferred
significant for.
maintenance is a huge
Yeah.
problem throughout.
But you always have to be cautious. And that's why I'm talking critical versus some folks just want to go plate the infrastructure, which is unnecessary from my perspective.
Yes, for those who are just listening in and don't see us, we have guests with us. We have Professor Tom Hall, an adored professor of accounting at the University of Denver, and he has a question for you.
So can you go back to the rainy day fund for a minute? What do you use the rainy day fund for? And then can you also repeat what you said about how you fund that? Did you say something
Yeah.
about when there's a surplus, half of that surplus goes into the rainy day
Yeah,
fund?
yeah. So when there is a surplus at the end of the fiscal year, half of the surplus gets automatically swept into the rainy day fund. And periodically, the budget folks calculate the volatility in our revenue to determine how large the rainy day fund should be to offset that volatility. The other thing that's put in is restraints that we can't spend the rainy day fund just whenever we want to. We have to have an economic downturn for us to then use the rainy day fund. And then we can use that depending on, we've got a rainy day fund for income tax, which can only historically be spent on education activities. We have an earmark for income tax goes to education versus general fund, sales tax, and other things that can be used for other things like that. And so depending where the shortfall is, if it's a shortfall in terms of income tax revenue, and we're trying to prop up some of those expenditures, then we're taking money out of the income tax fund to prop up education spending in those downturns.
Is that statutory or is that by amendment?
Statutory.
So it could be changed by a
In-
simple vote.
In theory, it could be changed, but we've had that in there for
We've seen the
decades
same
and decades.
problem with tax and expenditure limitations. I think it was Kansas or Nebraska had a spectacular tax and limitation bill, which required a 2/3 vote to change that. And then when they wanted to raise taxes with a simple 50+1 vote, they got rid of the tax limitation. We have here in Colorado the Taxpayer Bill of Rights, which also has some rainy day funds, but it's constitutional. And it requires a certain percentage put in rainy day funds for natural disasters, not fiscal disasters. And so if there's some sort of flooding, if there's some sort of tornadoes, something like that, and it could only be used for that, and then it has to be replenished within a year or two after that. And so it was designed so that it could not be pillaged by politicians. No offense, sir, but
no offense taken.
we have seen in the past all other rainy day funds and every other fund just pillaged and that that you cannot trust future legislators to keep their hands off of rainy day funds. There's no, without it being in the Constitution and described in a certain way that can be protected. There's just, I haven't seen any way that it can be protected. You say there's a culture, and that
And
that
we
is
benefited from that.
and
But
that
you're
culture is the best defense. But cultures do change, and we've seen it here in Colorado. That 30 years ago, the culture was to pass the taxpayer Bill of Rights, and now on those rainy day funds, that is the only thing that's protecting it. Otherwise, they would be absorbed.
Yeah, I caution people about, I think rainy day funds are not all rainy day funds. So I equivocate some of them to me saying that, hey, look I have tons of money in my checking account and in my savings account, but I haven't paid even the minimum on my credit card debt. Okay, and I have tons of credit card debt. So if you equivocate my savings account to a rainy day fund, I could point to that I have a huge balance, a $10,000 balance there, but I forgot to mention, I have $100,000 in credit card debt. So in many states, they have a quote rainy day fund. In Illinois, my home state, right now, the governor is, hey, I'm putting, $100-200 million a year into the rainy day fund. Well, he's shorting the pension plans by $5 billion every year.
Would you advise him to use the rainy day fund to pay off the pension?
I would advise, because it's disingenuous. They don't have a rainy day fund. You can't have a real rainy day fund if you're horribly in
Your
debt.
balance sheet is off.
If your balance sheet is off. So you might want to have some money for cash for emergencies, but
So, it's like saying I've got a net worth of $10,000. My house is underwater by $500,000, but I got
well, it's even worse than that, because you have a house. Okay.
Yeah.
It's more like credit card debt, where I have
You
this
spend
credit-
it, it's gone.
It's already gone. It's already spent. Oh, it's even worse than that, because future taxpayers are going to have to pay for that. So he's touting this rainy day fund. I would call it maybe an emergency fund. I just don't like the fact that he's touting this rainy day fund. California touts that it has huge rainy day funds, but it's more than $200 billion in debt. Can you really have a true rainy day fund if you're horribly in debt? It makes people think that your state is in a lot better financial condition than it is.
But if you only look at that, you're absolutely correct.
Now, there's an anger for me as a taxpayer, though, which is why we have at Independence twice put on a income tax cut and brought the tax rate now down to 4.4%, because even if you do bail out that pension fund, well, wait a second, we're paying into that pension fund, and here I am working as a private worker to pay some 58-year-old who's not working, but I still have to work more years to pay somebody who's not working. And I know equity is and social justice are all the buzzwords. I don't see the social justice of a bunch of people having to work later in life to keep younger people retired early. And so part of me says, no,
But in order for the taxpayers to understand how much these pensions really cost, they have to be properly funded, and the taxpayers have to be properly taxed to fund that.
But
then the taxpayers go, hold it. This happened in Wisconsin. Wisconsin had, they truly balanced their budget, and so therefore, as pensions and retiree healthcare costs got higher and higher, taxes got higher. And finally, the taxpayers said enough already. And they went and pushed to have pension and retiree healthcare reform, because they understood how much it really costs. But if you go ahead and if you artificially keep so the taxpayers don't have to properly fund those, then it just pushes the can down the road longer and longer.
Let me flag.
We have less than a minute left, and we're going to be shutting the cameras off. So if everybody could just have about a 15-second closing, it's going to, we've had so much fun. It went fast. So please, if Mr. Dougall.
Well, I was just on the rainy day fund. I was just going to say, we also have a cap. So you can't just let it keep growing indefinitely. The other thing is it only kicks in for an economic downturn, not overspending. So some cautious things. The key thing is just recognize this is other people's money and you have to respect that. And at the end of the day, we can do all sorts of things about statute this and transparency there. It's other people's money. We need to get as much of it back to them as we can.
Truth in Accounting are not a bunch of nerdy accountants. They are actually a bunch of subversive freedom fighters who someday will be taken from their houses and gone missing and found in a gulag someplace. And so those people who are supporting their efforts, you are not just supporting openness, you are saving a country by doing so.
Thank you.
Thank you for that. This really was a great conversation, and thank you to all our panelists who took time out of their schedule to give everyone a new perspective. And thank you to everyone listening. These are very important issues, as we know, and we are glad that you are investing time in learning more about them. To find all of our reports and more information on government accounting standards, please visit our website, truthinaccounting.org, and our sister website, data-z.org. for the data behind all of our reports. And while our reports are free for everyone, they are not free to make. So keep Truth in Accounting part of the national dialogue and donate today. And thank you to the Independence Institute for allowing us to use this great facility for this recording, and check out their work at i2i.org.
Or just go to thinkfreedom.org, thinkfreedom.org.
There you go. Thank you again, everybody. Have a great day.